Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at the Exchange ETF conference. Joining us for this segment, we have Noah Hamman, CEO of AdvisorShares. We're going to discuss strategies that are designed to react to market machinations. It's one way to put it for 2022. Great to see you as always, Noah.
Good to see you.
Welcome back to Trade Talks. Let me get your thoughts around market volatility and risk. Certainly it was a little whipsaw in 2022. January was an interesting month. We saw some green.
Yep, absolutely. So you saw kind of a rally in those technology stocks that got battered last year. I'm not entirely sure what's driving it, except I think there's some impression from the market that the Fed will maybe stop at some point raising interest rates, but that's not what they're telling the market. So we feel like there's going to be more volatility like we saw in 2022 ahead.
So it's time to get a plan to be defensive?
Yep, absolutely, absolutely. So investors want to try to manage that risk. And you never know when the right time is to do it. Timing it, genuinely trying to time it is difficult. And so we talk to people about being tactical, right? Taking a little bit of a defensive measure when it's kind of cloudy outside. When there's rain, you want to be very defensive. And it's hard for the average investor to do, but there's products and solutions out there that people can use to try to adjust to challenging markets.
Yeah, and we're going to talk about that, but I feel like one of the key themes at this conference, active is back, and
yep.
Only going to be more back in 2023.
Absolutely, I hope so. I mean, we saw that prove out a little bit in 2021, going into 2022. We'll see, I mean, as the market continues, we've seen strong flows into it. We've seen performance, which is nice. Active managers are coming back and beating some of these indexes. So yeah, hopefully it's going to be a strong year.
So let's talk about AdvisorShares and these plans to be able to move with the market reactions.
Absolutely, and what people sometimes think is that if you're going to get defensive to the market, you're going to potentially sacrifice returns, but that's not always the case. There's a variety of products out there, whether it's short only or long short. We have a couple of products, DWUS and DWAW, that will get that tactical. They'll move away from the market and go to cash, but they also just recently got their 3-year ranking, and there are 4- and 5-star products. So you can have something that moves defensive, but still have your performance with it as well.
So how are advisors using these types of products in their client portfolios?
The nice thing is it's a simple approach. They can just buy and hold to it. So when an advisor wants to have more defensive posture in a client's portfolio, they'll increase their allocation to these ETFs, and then all the tactical work is done inside it for them, very tax efficiently, very cost efficiently. And when they want to, push the gas a little bit more for their clients, they can back away from those tactical strategies. But it's very flexible and very easy for them to use.
All right, now appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.